Upwork Stock, ticker symbol UPWK, is up 13% in the past year, and I believe this stock could 10x in the next 7 years. However, if we zoom out, the stock is down 11% in the past years. This stock has a lot of potential as it has a market cap of only $1.7 billion. In this video, I am going to do an in-depth analysis of the company by looking at the financials, the forecast, some important statistics, using my spreadsheet to calculate the intrinsic value of Upwork. We're also going to look at the risks of investing in this company, as well as revealing whether or not I am adding it to the stock portfolio challenge. Upwork is a company that helps companies find freelancers. As you can see, they have a very nice website, and they are the largest US freelance platform by GSV, which is the gross service volume. So they are doing something right. Starting with their financials, their revenue has grown very nicely over the past 5 years, growing from $300 million to $771 currently. And remember that this is a company that has a market cap of $1.7 billion, which puts them at a price to sales of 3, which is very decent compared to competitors. Then, if we take a look at their profit, they used to be an unprofitable company, but since 2023/2024, they are currently a profitable company, and they have $234 million in net income. And in terms of free cash flow, more or less the same, and they have currently $169 million in free cash flow. Their margins are very, very good, with gross margin being at around 77%, which is very, very high. Profit margin is now at around 30%, and free cash flow margin has been at around 20%. The only thing that I do not like about the financials of this company is the number of shares outstanding, which has been increasing over the past few years, and we will see later in the risks that this includes in investing in this company. Then, in order to calculate the intrinsic value of Upwork, I use my spreadsheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. As you can see, according to the discounted net income and free cash flow margin, the intrinsic value is between $13.58 per share and $46. This also means that if my low assumptions occur, you're going to get an 11% annual return on your money, middle 25%, and high 37%. So huge returns according to my middle and high assumptions. Moreover, this means that if my high assumptions occur, you are going to get a 10x return in 7 years, which is insane. So huge returns according to the spreadsheet. And I think my assumptions are reasonable as I have the company growing revenue at 3% on my low assumptions, 5% on the middle, and 7% on the high, averaging a profit margin and free cash flow margin of 15, 25, and 35%. And because they have such a high gross margin, I think they can achieve this. And I assigned a pre and price to free cash flow at the end of the 7 years of 18, 20, and 22. I will leave a link if you want to access the spreadsheet below. It's very simple to use as I've done all the calculations here on sheet 2, so the only thing you need to do is move these numbers around. The spreadsheet does not attribute any value to the balance sheet, and Upwork has a perfect balance sheet as they have more cash than debt. As you can see, they have $622 million in cash and only $370 million in debt. So they are net cash positive, and this is nothing for a company that has a market cap of $1.7 billion. So now let's quickly take a look at the main risks of investing in Upwork. Number 1 is the active clients. As you can see here, they have decreased from 872,000 all the way to 812,000. Now, this could be a combination of the company softening up and the vibe coding eating into some of the work that could have been outsourced. Also, Upwork might be focusing on bigger tickets with client-defined projects versus someone like Fiverr, which focuses more on smaller freelance offerings. Number 2 is the insider management selling that has been happening lately. Could be a warning sign, but most of this was due to automatic tag sales on vested shares. And number 3, as I said before, the number of shares outstanding. They have been increasing, therefore you own less of the company. For example, let's say a company has 10 shares outstanding, and you own 1, so therefore you own 10% of the company. If they issue 2 more shares, there are now 12 shares outstanding. You are sharing the profits with 2 more people, therefore you now own 8.3% of the company instead of 10%, and by doing nothing. What this means in the valuation, as I said before, I put a 0% change in the number of shares outstanding. However, if we assume they issue 2% of their shares, as you can see, the intrinsic value decreases substantially and your returns will get affected. In conclusion, I definitely think it is worth investing in Upwork. There is a ton of risk and it is a small company, but we have a company that is trading at a low valuation, PE of 7, a company whose fundamentals are increasing, and a company that has a perfect balance sheet, and the valuation looks very, very attractive. All these things tend to lead to a multi-bagger. I hope you found this video valuable. Let me know what you think about Upwork Stock in the comments, and I'll see you in the next one.